Good morning, Crypto Nurse here. I am going to read to you an article from Brian Rudick on CoinDesk talking about the anatomy of a meltdown. He's talking about how a market meltdown could send Bitcoin soaring to 1 million. So let's just see. So there's been much consternation in traditional markets of late, with a variety of reasons to blame. First, the Bank of Japan raised interest rates to combat the failing yen, causing traders to unwind yen carry trade positions. Second, worries around the U.S. economic growth came to the fore after a series of disappointing releases, especially the latest employment report. And finally, fears of a wider war in the Middle East arose after Iran vowed retaliation for the assassination of a Hamas political leader. So such financial, economic, and geopolitical uncertainty caused widespread panic, resulting in, for example, Japan's Nikkei recording its largest single-day drop since 1987, and many large U.S. tech stocks falling to double digits over several days, just to name a few. Cryptocurrencies, which would have been expected to fall by a greater amount than equities anyway, had their own negative drivers, including impending Mt. Gox fallout, mixed spot digital asset ETF flows, a rising appreciation that pro-crypto Trump candidacy isn't a lock, and reports of a large market maker dumping hundreds of millions of dollars of crypto during the panic's peak. All in, Bitcoin touched 49,200, down 30% from the week earlier, while Ethereum fell below 2,200, dropping 35% over that time. Despite the downturn, we remain convinced as ever in the bull thesis, with its core tenets towering in place. Central bank rate cuts. We stand at the beginning of a global monetary easing. As shown below, rising global liquidity has historically catalyzed Bitcoin. ETF flows. The spot Bitcoin ETFs have garnered 17 billion of net flows, and the spot Ethereum ETFs are getting over the ETH outflow hump, and the houses are starting to allow FAs to solicit allocation, all amounting to a slow but steady TWAP buy. Improving U.S. stance regardless of who becomes president, a greater desire from both parties to institute clear guardrails that protect consumers and foster innovation while ultimately igniting a wave of corporate activity. Bitcoin for governments, though low odds and likely requiring a Trump victory, the creation of a U.S. strategic Bitcoin reserve could prompt a nation's state-level war for Bitcoin, given the potential implications and game theoretic buying by others. And if these near-term bull tenets say nothing of crypto's supreme driver, which is what it will over decades ultimately become. And while there may always be a black swan event, it's hard to identify many large and likely risks. For example, dissipating overhangs, the specter of past sins are resolving, whether it be FTX returning 13 billion of cash to creditors or Mt. Gox disturbing Bitcoin to victims, disbursing Bitcoin to victims of its hack. To boot, these may turn into catalysts as FTX cash is reinvested and the Mt. Gox overhang is removed. Traditional market risks, financial and economic uncertainty may be ebbing, with the BOJ suggesting rate hikes are done for now and Goldman Sachs ascribing just 25% chance of a U.S. recession. Other risks like U.S. selling its 13 billion seized Bitcoin portfolio, heavy altcoin unlocks, and stablecoin insolvencies could go the other way, seem manageable or appear of falling odds. All in, should the bull tenets materialize, the risks fade and crypto may stride towards its endgame, perhaps with a DApp that goes mainstream or Bitcoin Ethereum's adoption as the world settlement layer. We believe Bitcoin would easily surpass 1 million, skewing the risk-reward exceedingly positive as just about any odds of the above occurring. Imagine instead of Bitcoin as digital gold, or gold becomes relegated to physical Bitcoin. So this dip, we could look at it as a time to buy. Ultimately, we see the dip as a gift, offering a solid entry point and pushing crypto to its greatest risk reward in years. So the bull tenet's squarely in place as risks fade, a legit chance of 1 million Bitcoin and greater potential upside that after the recent dip. The risk reward has rarely looked so compelling. Whew, time to buy some Bitcoin.